Imagine two people who wake up at the same time every day. Both work hard, meet deadlines, deliver results. At the end of the month, both receive their salary. So far, everything seems equal, but there is a silent difference between them. And this is exactly where Robert Kiyosaki draws our attention. The first person lives only on their salary. Every month, money comes in and goes out. Rent, bills, groceries, taxes, installments. When the month ends, the money also ends. If they stop working, the income stops immediately. It's like carrying water with your hands. No matter how much effort you make, it always spills. The second person uses part of their salary to build assets. Assets are things that put money in your pocket even when you're not working. It could be a small business, an investment that generates income, a digital project, a stake in something that grows over time. At first, the return is small, almost imperceptible. But month after month, that asset starts working on its own. Kiyosaki teaches that most people's big mistake is not earning little, but depending only on their salary. The salary is important, of course. It pays the bills and brings stability. But it doesn't create freedom. Those who depend only on it are always trading time for money. When you build assets, the logic is reversed. You work today to reap tomorrow. The effort stops being just physical and becomes strategic. Instead of asking, how much will I earn this month? You start thinking, what am I building that will pay me in the future? This is how money starts working for you. And when this happens, something changes inside. You stop running after money and start building paths for it to come to you. This is the first place where money is in 2026, in assets, not in salary. Now imagine the following scenario. One person is complaining about a problem. Another person is observing that same problem in silence. The first one stresses out. The second one sees an opportunity. This is where Robert Kiyosaki teaches one of the simplest and most ignored lessons about money. Money doesn't appear out of nowhere. It emerges when someone solves something that bothers, delays, or makes other people's lives difficult. The bigger and more urgent the problem, the greater the value the market is willing to pay for a solution. Think about it simply. If something breaks in your house and you don't know how to fix it, you pay someone who does. If you don't understand finances, you pay an expert. If you don't have time, you pay for convenience. Money always flows toward those who solve real pains. Kiyosaki explains that entrepreneurs don't get rich because they're smarter, but because they learn to observe the world with another question in mind. What problem do people have, and how can I help solve it? While many complain about the price of things, the crisis, or lack of opportunities, those who think like investors do differently. They observe, where are people wasting time? Where are they spending more than they should? Where are they confused, insecure, or unprepared? Each of these situations is a problem, and every problem is an invitation to create value. In 2026, money will continue going to those who understand this, not to those who wait for a perfect chance, but to those who decide to learn, improve, and offer solutions. Sometimes the solution is simple. Other times it requires study and practice. But it always starts with attention to what's happening around. When you stop asking, why is this happening to me? And start asking, how can I solve this? You stop being a spectator and become a creator of opportunities. This is the second place where money is, in the problems you solve, not in the complaints you make. Before continuing, let me ask you something simple and important. If this content is making sense to you, if these ideas are opening your mind and helping you see money differently, like this video now. This shows the algorithm that this type of message needs to reach more people who also want to evolve financially. And of course, it's your way of saying it's worth continuing to bring this content here. Now, think about two people who earn exactly the same amount per month. Neither received a raise, neither won the lottery. Even so, over time, one prospers and the other always lives tight. The difference between them isn't in the salary, it's in knowledge. Robert Kiyosaki makes this very clear. It's not about how much money comes in, but about what you do with it. Financial education is understanding how money moves, where it goes, and especially how to make it come back larger. Those without financial education usually repeat the same cycle. Receive, spend, pay interest, get into debt, and work more to cover the whole. Those who learn the basics about taxes, investments, and cash flow start making different decisions. Small at first, but very powerful over time. It's like learning the rules of a game. Before, you played in the dark. After you understand the rules, you notice where you were losing without even noticing. Kiyosaki teaches that school prepares people to work, but rarely teaches how money really works in the real world. When you learn financial education, something changes inside your head. You start thinking before spending. You learn to differentiate assets from liabilities. You begin to see opportunities where before you only saw consumption. Money stops being a mystery and becomes a tool. In 2026, those who invest in financial education will always be a few steps ahead. Not because they know everything, but because they know how to learn, adapt, and correct the path. Knowledge protects, guides, and multiplies. This is the third place where money is, in financial education, not just in effort. Imagine a job where, if you don't show up, money doesn't come in. Now imagine another scenario. Even when you're sleeping, traveling, or spending time with family, the business keeps running. This is exactly the difference that Robert Kiyosaki calls scalable businesses. Traditional businesses depend directly on the person's time. The more hours worked, the more earned. The problem is, the day only has 24 hours. Scalable businesses work with systems, not just human effort. Kiyosaki teaches that true financial freedom begins when you build something that doesn't need your constant presence to generate income. It can be a structured business, a company with clear processes, a digital project, a franchise, or any model that grows without requiring you to be involved in every detail. At first, it takes work. You need to plan, organize, make mistakes, and adjust. But each step taken in structuring creates something much bigger than a monthly income. It creates a money-generating engine. Think like a child would understand. If you push a cart by yourself, it only moves while you push. But if you build an engine, it keeps moving even when you let go. Scalable businesses are that engine. In 2026, money will be increasingly concentrated in those who understand this. Those who build systems gain time. Those who gain time gain freedom. And those who have freedom can think better, invest better, and grow even more. This is another place where money is, in businesses that grow by themselves, not just in constant work. Robert Kiyosaki teaches that investing isn't about luck, nor about following random tips. Investing is about understanding where money goes in, how it behaves, and what return it can generate over time. Common people only think about saving money. People who build wealth think about putting money into assets that produce income and appreciation. The difference isn't in the amount invested, but in the logic behind the decision. Smart investments require analysis. You need to understand risks, returns, time frame, and cash flow. Those who invest without knowledge usually act on emotion and end up frustrated. Those who invest with financial education make calmer, more strategic, and more consistent decisions. Kiyosaki reinforces that assets like well-structured companies, properties that generate income, and solid stakes are tools for long-term growth. It's not about getting rich quick, but about building a foundation that strengthens over time. In 2026, money will be increasingly concentrated in those who invest with criteria. Those who study before investing reduce risks, seize opportunities, and create financial stability, even in difficult scenarios. This is another place where money is, in smart investments, not in impulsive decisions. Robert Kiyosaki makes it clear that rich people don't just focus on accumulating goods or numbers in an account. They focus on constant money coming in. This is what keeps financial freedom alive day to day. Many people confuse net worth with wealth. They may even have something of value, but if it doesn't generate money regularly, the person continues dependent on active work. Cash flow is what sustains choices, pays expenses, and allows growth without suffocation. When you understand cash flow, you start looking at your assets differently. The question stops being, how much is this worth? And becomes, how much does this generate per month? This shift in thinking completely changes financial decisions. Kiyosaki teaches that those who build wealth think about multiple sources of income, not out of greed, but for security. If one source decreases, the others maintain balance. This is the kind of stability that salary alone doesn't offer. In 2026, money will be in structures that generate recurring income. Those who learn to create and protect cash flow gain predictability, tranquility, and decision-making power. Without this, any unforeseen event becomes a big problem. This is another place where money is, in constant cash flow, not just in accumulated value. Robert Kiyosaki teaches that money doesn't disappear in difficult times. It just changes hands. While most react with fear, complaint, or paralysis, a small part of people observe, analyze, and act with strategy. Crises, economic changes, and technological transformations create discomfort for many, but also open doors that didn't exist before. The problem is that these doors aren't obvious. They require attention, preparation, and courage to see beyond the noise. Those who think like investors don't follow the crowd. They study the scenario, understand the movements, and position themselves when there are still doubts. This is why many assets are bought at lower values exactly when most people are afraid. Kiyosaki reinforces that opportunity doesn't appear for those who wait for total security. It emerges for those who prepare beforehand, learn continuously, and keep an open mind. It's not about predicting the future, but about being ready when the scenario changes. In 2026, money will be with those who know how to observe trends, identify changes, and act calmly when others are insecure. Those who learn to see opportunity where others only see problems build an advantage in the long term. This is another place where money is, in opportunities that few see, not in the majority's thinking. Robert Kiyosaki reinforces that getting rich is not a solitary path. People who build wealth consistently understand that no one knows everything and that walking alone limits growth. The right partnerships accelerate results because they unite different skills. While one person masters strategy, another understands execution. While someone sees opportunities, another knows how to structure. When these competencies connect, growth happens more solidly. Many people try to do everything alone out of fear of sharing gains. Kiyosaki teaches that this thinking stops progress. Sharing gains in a well-structured project is often better than trying to control everything and growing slowly. Partnerships aren't just formal partnerships. They also appear in mentors, contacts, support networks, and people who have already walked the path you want to follow. Being close to those who think better financially changes decisions, habits, and vision of the future. In 2026, money will be increasingly close to those who know how to connect with the right people, learn from them, and build strategic alliances. Those who choose well who they walk with reduce mistakes and expand opportunities. This is another place where money is in the right partnerships, not in isolated effort. Robert Kiyosaki teaches that trying to avoid all types of risk keeps people trapped in the same place. Those who seek absolute security usually choose the most predictable path, and also the most limited one. Building wealth isn't acting on impulse, nor betting on the unknown. It's evaluating risks, understanding scenarios, studying possibilities, and making conscious decisions. Risk doesn't disappear, but becomes controlled. Financially educated people don't just ask, "Can I lose?" but also, "How much can I gain? What's the worst scenario? And am I prepared to deal with it?" These questions transform fear into strategy. Kiyosaki reinforces that the biggest risk is often not acting. Standing still, waiting for the perfect moment, causes opportunities to pass. Those who learn to calculate risks act with more clarity and less emotion. In 2026, money will be with those who understand that growth requires planned action. It's not those who risk everything who win, but those who know when to advance, when to retreat, and when to wait. This is another place where money is, in calculated risks, not in the excessive search for security. Robert Kiyosaki teaches that the biggest difference between those who build wealth and those who live only to pay bills is in the way of thinking. It's not about position, profession, or income, but about mindset. An employee mindset focuses on completing tasks, receiving at the end of the month, and avoiding problems. An owner's mindset observes costs, efficiency, growth, and opportunities. Those who think like owners constantly ask themselves how to improve results and create value. Even working for someone, it's possible to act like an owner. This means understanding how money comes in and goes out, seeking solutions, thinking long-term, and taking responsibility for one's own financial decisions. Kiyosaki reinforces that those who think like owners seek assets, build systems, and invest in knowledge. They don't wait for permission to grow. They learn, adapt, and make decisions aligned with their goals. In 2026, money will be with those who take control of their own financial life. Those who develop an owner's mindset change habits, make more conscious choices, and build continuous growth. This is another place where money is, in the owner's mindset, not just in work. If this content is making sense to you, like the video now. This helps the channel a lot to continue bringing content that really makes a difference. Throughout these points, one thing becomes evident. Money is not chance, it's not luck, and it's not privilege. It follows logic, direction, and behavior. Robert Kiyosaki always reinforces that those who understand these rules stop running after money and start positioning themselves to receive it. In 2026, it won't be those who work more hours who win, but those who think better. Those who learn to decide calmly, to build gradually, and to act with intention. The difference won't be in the starting point, but in the choices made every day. Each financial decision is like a vote for the type of life you want to build. Some choices bring immediate comfort, others require patience, but create freedom. Those who understand this start playing the money game consciously. Not every change is visible on the outside, but almost every transformation begins inside. When the way of thinking changes, choices follow. And when choices change, results cannot remain the same. Financial growth doesn't happen when everything is easy. It's born when you learn to act even without guarantee. It's not about total control, it's about clear direction. There's a huge difference between wanting to improve and committing to improvement. Commitment appears on ordinary days, when no one is watching, when the decision needs to be maintained without applause. Every person who builds financial stability learns something essential. Discipline beats motivation. Motivation fluctuates, but discipline sustains the path. You don't need to accelerate. You need to continue. Those who respect their own pace go further than those who start and stop several times. And the more you advance, the more you realize that the real gain isn't just financial. It's clarity, tranquility, and control over your own decisions. Many people spend their entire lives reacting to circumstances. Others, at some point, choose to take command. This choice doesn't change everything at once, but it changes who decides the direction of the story. The more you learn, the more you realize that money responds to behavior. It flows better to those who plan, observe, and adjust, not to those who live on impulse or in a hurry. There's strength in those who continue even when the result hasn't appeared yet. Silent persistence builds foundations that don't crumble over time. This is how real security begins to take shape. Financial maturity doesn't come from big gains, but from repeated decisions made consciously. Small, accumulated successes are worth more than one big, isolated success. You're developing something that no one can take away: vision. And when vision changes, the path becomes clearer, even before the destination appears. Keep going at this pace. The progress that seems slow today is what sustains tomorrow's growth. There's a point where a person realizes they don't need to prove anything to anyone. They just need to stay firm in what they decided to build. This understanding brings calm, focus, and constancy. When you stop comparing yourself, energy is left to evolve. Comparison distracts, clarity directs, and those who know where they're going don't get lost with the noise of the path. Consistent results are born from choices aligned with purpose, not shortcuts. What is solid takes a little longer, but remains when the rest disappears. With each step, you develop more control over your decisions. Less anxiety, more strategy. Less reaction, more intention. This is how stability forms. True growth doesn't need to be announced. It appears in security, in tranquility, and in the freedom to choose better. Now, everything connects. Nothing that was said here works in isolation. It's the sum of choices, the way of thinking, daily discipline, and the willingness to learn that builds a different path. There's no magic point. There's continuity. You don't need to change everything today. You just need to maintain the decision not to return to where you were. Each conscious adjustment strengthens the next step. Each firm step creates security, and security opens space to grow calmly. Money stops being a burden when you take control of the process. When you understand that financial evolution is a consequence of posture, not haste. Those who build this way don't depend on luck, they depend on consistency. If you made it this far, it's because something made sense. Use that. Keep applying. The future responds to those who act with intention. This doesn't end a story. This begins a different phase, more conscious, more strategic, and more aligned with the life you want to build. If this content made sense to you and spoke to the moment you're living, like this video, this helps this type of message continue reaching those who also need to hear and learn to think differently about money and choices. We continue together, step by step, building something solid.